I have kids, I have a daughter, and every time we go to the grocery store, we go down that cereal aisle, right? And she's it's amazing. It's got all different types of cereal, and she's like picking stuff out. And as a parent, what's the first thing that we do? We look on the cereal box and we go to the side and we look for that nutritional information. Is sugar the first ingredient? Things like that. How many calories? So I bring this up because if you think about the world of emerging managers, first, second, third time funds, they all have a beautiful cereal box cover. They all have a wonderful story, and they all promise to deliver great returns. But when you look on the side, there is a missing label, right? There is no standard data capture. There's no way to really understand what's behind the scenes, the engine that's powering the strategy.
Hey everyone, this is Prashant and I'll be host for the VC 10X podcast. And today we have Eric Wu with us. Eric is a co-founder and CEO at Revere, a platform where they help LPs build their VC portfolios. In this episode, we talk about how Revere got started, Revere's rating system to evaluate fund managers, what should emerging GPs do before starting to raise their funds, helping GPs communicate and refine their stories, how they conduct diligence on GPs, and a lot more. So without wasting any time, let's dive straight in. Hey Eric, so good to have you on the VC 10X podcast. How are you doing?
Doing great. It's Friday, so looking forward to the weekend.
Yep, pretty awesome. So to start things off, can we have your story and why you started Revere?
Yeah, sure. I'll try to give you the short version of the story, but a lot of this really sparked from my experience as a former institutional allocator that was tasked for helping to build a portfolio of early stage emerging venture capital managers. Worked with two very large fund of funds here based in the San Francisco Bay Area. And within those organizations, they were aspiring to find the next generation of talent, right? And these were first-time funds that really came from different backgrounds. Could have been an operator angel, could have been a spin-out situation. And a lot of the tools and the pattern recognition that I was fortunate to have developed over 10 years of track record, I just found that was the secret sauce to really understanding how to evaluate a large and growing ecosystem that was writing the first check into founders. So that coupled with more recently had been at AngelList, helping them establish an institutional capital platform, basically a fancy way of saying, how do we get their community of angel investors who are now turning into professional fund managers, get connected, tell their story with this class of LPs, whether it's high net worth individuals to family offices, to even maybe smaller institutions. So when you combine the beauty of building product and having engineering talent to help democratize an asset class like venture, which is effectively the mission of AngelList, that formative experience along with that toolkit I had built as an institutional allocator really was the ingredients, the inspiration to start Revere, to bring that data, that knowledge, the frameworks in a standardized fashion to create more transparency between the GPs and LPs in this part of the asset class.
Right, absolutely. That's pretty amazing. And besides, I want to talk to you about what Revere actually does and how it is helping allocators build their VC portfolios.
Perfect. So we start basically with helping people go through the first two steps, which I call discovery and diligence. Obviously, the last step is really the transaction layer, where at the transaction layer, there's a lot more, let's just call it kind of tech, digital subscription documents. There's a lot of great startups and platforms that are on that final step of distribution and unlocking access. But if you think about discovery and diligence, this is really where the friction points are happening. And partially this is because there's just hundreds, if not thousands, of emerging managers that have sprung up over the last few years. A lot of that has been sparked by the idea that to get started as a fund, the fixed cost is much, much lower. And we also know a lot of the larger, bigger brand name franchise firms, as they've gotten larger, raised more capital, they tend to concentrate that capital, let's say at Series A and Series B. So that has created an opportunity. It has created a funding gap that is now being filled by a lot of these emerging managers that are very specialized, investing kind of pre-seed and seed stage. So if you think about that funding gap and the number of players trying to get their funds started, build their track record, and the LPs that are looking for that type of exposure, right? This is really where the alpha part of venture capital is being generated. They have issues around coverage. They have issues that when they do find interesting fund managers, how do they evaluate them and do that evaluation that goes beyond, the gut instinct, or, I got referred to this person from, my neighbor who I trust and sounds like a good story. Maybe I'll put some money in. So, so we really help with those first two steps. And, perhaps Rashawn, I'll give you kind of a very simple analogy that can kind of help people appreciate, what this feels like maybe in everyday terms, right? So I have kids, I have a daughter, and every time we go to the grocery store, we go down that cereal aisle, right? And she's it's amazing. It's got all different types of cereal, and she's like picking stuff out. And as a parent, what's the first thing that we do? We look on the cereal box and we go to the side, and we look for that nutritional information. Is sugar the first ingredient? Things like that. How many calories? So I bring this up because if you think about the world of emerging managers, first, second, third time funds, they all have a beautiful cereal box cover. They all have a wonderful story, and they all promise to deliver great returns. But when you look on the side, there is a missing label, right? There is no standard data capture. There's no way to really understand what's behind the scenes, the engine that's powering their strategy. So Revere, and what we do with our rating system framework, is effectively creating that standardized label to help a lot of LPs appreciate, understand, and compare the different fund managers and their strategies.
Absolutely, that's a great approach, because for LPs as well, it becomes difficult because they get so many pitches from these emerging managers that we want your funds, and then it's difficult to access them. Right? Are these the right funds to invest in? Because LPs are usually not investing in a lot of funds. They are usually have maybe a portfolio of 10, 15, maybe at max 20 funds that they are invested in, and they are already invested in a bunch of those, and every time they're looking to add maybe one or two more, and it's not a lot, and to pick those one or two funds that are right for them, it becomes difficult. And having that standard process wherein everyone is evaluated on the same terms and then given a rating, so that's great. And besides, I want to talk about the fund manager side. So if they want to raise a fund, and it obviously is a lot of effort to reach out to these LPs if you're not using a platform like Revere, right? Because these are all very scattered, and you email them, you don't get a response back, and all these things happen. And there are stories that, okay, we attended 600 calls, 1,000 calls with LPs, and then we raised our first fund. So I want to talk to you that how can Revere reduce this effort for these fund managers to raise their fund, and what all work do they need to put in before they start this process of raising their fund?
Yeah, yeah, I think a lot of this is it's about education. Many people, when they think about fundraising, they might have experience fundraising as a founder and entrepreneur. Fundraising from LPs is different. It's a completely different customer segment. So we see our role as helping to educate and create transparency in the sense that we know what LPs are looking for, and we know the types of questions that they're going to ask in that front half of the due diligence process. So, you know, on the fund manager side, the first thing we say is we are not a fundraising platform, right? If I talked about those three steps of the journey, that transaction layer, is really where they're out there working with different platforms to get connected directly with LPs. We really think of ourselves as the infrastructure, the middle office, if you will, the translation layer to help translate the message of the GP in a standardized fashion so that LPs can consume it in a way to help qualify the lead. Right. So that's a really important distinction that we tell fund managers when they get registered and they go through the onboarding process that, think of us as, kind of graduate school, right? We're getting you ready to go off in the real world to prepare yourself for fundraising. So that's the first important point that I'd make. And then the second point on the GP side is there's a lot of blind spots, right? And by them going through our process, which is very, very transparent, we actually share our scores with them, give them a chance to rebut the scores, give us more information. We explain, what makes, on a 1 to 5 scale, what does a 5 look like? What does a 3 look like? And through that process, they really get a better sense of how they stack up relative to other fund managers. So the value for fund managers really at the end of the day is going through that standardization process and also appreciating and understanding where are some of those blind spots, where are some of those things they need to work on relative to other fund managers to help enhance their story.
Yeah, that's a great approach. And but on the website, I saw that there were two buttons, one for the fund managers and one for the allocators. Is any sort of connecting with LPs happening at all, or are they just there as a community?
Yeah, I think about this from a customer experience perspective, right? But both of them, we want to make sure has a good experience, right? So um, the LP side, the investor that's looking to invest in the funds, they're the ones who are paying us, right? They're the customer in the classical definition. But the fund manager, in terms of what they do, who they are, that is really in essence the product, right? And so working with them, we want to make sure there's a good experience there. And obviously, the better the product is, the easier it is to sell, right? So that's really our job, right? Our job is to build and present the best product to market that product in the sense of how do we take a lot of that friction so that LPs don't have to take a lot of first and second calls, because if they read the report and instead of meeting for that coffee meeting, kind of people are wasting time, is this a fit, is this not a fit? Our reports, our research, our data is intended to short circuit that so that LPs can get to that handful of funds that they really find that are interesting and a better fit. And for the fund managers, it's a better experience, because instead of trying to meet 500 family office LPs through our mechanism, through our reports, we can say, hey, here are the 5 that have read your report and are interested to learn more. So you have a qualified mechanism to spend time with the right types of LPs.
Great. So basically, the LP side is there, and you are the ones who are basically recommending the right funds for them to invest in. Is it like that? And fund managers are there just to prepare and get ready to raise that fund, get in the best state possible, right?
Yeah, it's not an investment recommendation, right? It's almost
Okay.
like kind of a search engine,
Mm-hmm.
list of results, right? So
Right.
for example, a big trend that we see is a lot of funds around impact investing or climate tech.
Yeah.
So if you search through our directory, if you're an LP and you get on our directory and you kind of search for climate tech funds, you'll probably see somewhere between 8 and 10 funds.
Mm-hmm.
And when you read those reports on the 8 to 10 funds, it should hopefully narrow down to the 2 or 3 that really kind of resonate with you,
Right.
right? And when we talk about the scoring system, we'll unpack a little bit about sort of what does it mean to resonate, or what is it a good fit. But if you think about the navigation, if you think about the experience for the LP, that's really what we are intended to help them with, right? Narrow the funnel, read our reports, get down to the handful that you're serious about, and then allow for that communication to happen where we connect the LP to the GP, right? Again, LPs are paying us for access to the reports, for doing the deeper dive due diligence on the reports. And then GPs, by virtue of them sharing their information, get the potential, the upside of being connected to very qualified LP leads.
Yes, absolutely. And talking about the emerging manager landscape, and since you are like evaluating them on a certain standard test, so what are these? What does this test actually evaluate them on? What's the basis of this? What are the few things that you're looking for in a fund manager to actually rank them in a certain way or give them a rating, and then maybe present it to the LPs?
Yeah, so the scoring framework is 20 different categories. The big buckets of the criteria include the team, the track record, sourcing, value add, and firm management. And within each of those buckets, we have more granular categories where we try to create some segmentation around different elements of team, right? So if you look at team, how much operating experience does the fund manager have? How much investment experience do they have? How are they, building community? What does their bench look like, right? So a lot of single GPs, first-time funds, don't have the ability to hire, employees, but they can have venture partners, they can have advisors that are well integrated into the process. So these are all elements that we look for, right, when we are going through the evaluation process. And when we sit down and go through that due diligence, both in the fashion of downloading their data room, parsing through that, as well as spending time, usually it's about a 1 to 2 hour call, live due diligence call, similar to like what we're doing now here. They are able to really articulate what they're working on. A lot of times we take case studies as the form of quantifying some of these areas that may be more qualitative in nature. But overall, 20 categories. Some of them lend itself to be, I would say, a little bit more mechanical because they're quantitative in nature, things like track record. But some of them are more qualitative when we're trying to assess and evaluate value add in the different components of how fund managers are adding value.
Yep, got it. And is the platform paid for GPs to sign up, or is it paid on the front of LPs to get on and then build their portfolios?
Yeah, all on the LP side. GPs don't pay anything. That's intentional,
Hmm.
right? Because if you think about us as an independent rating agency, we want to avoid conflicts. If fund managers are paying us, that kind of begs the question: are we scoring them in a different fashion if they're paying us? And on the LP side, I think the mechanics of how they pay. I mean, I'll give you a couple of use cases because again, we're kind of early days in that revenue. We do have paying customers, but some people might come to us and say, "Hey, Eric, I've got 3 or 4 funds that I'm evaluating. I'm kind of stuck, right? Can you do the evaluation on a one-off basis for these 3 funds, and then through your help, your second opinion, it really helps me make that decision. Which one I should select, which one I should invest in." So we get kind of consistent sort of inquiries and requests to kind of do the one-off reports. And then we also work with a lot of investment platforms servicing as their vetting and due diligence layer, right? So one of the trends that we talked about is, this idea that there's more LPs investing in early stage venture, there's more democratization of the asset class, and through that, what we're finding is there are platforms, right? Whether it's an alternative asset management platform, it could be a private wealth advisor who manages client money, and that client money is looking for exposure to venture. But everything in that lens feels more like an enterprise engagement. And we charge those platforms and enterprise engagements a subscription contract, right? So, I want 3 a month, I want 4 a month. There might be some additional features as part of that um, subscription model. But generally, that's the 2 ways that we get paid from the LP side.
Yeah, got it. And talking about the LPs, they're actually different kinds of LPs with different priorities set. Like there would be LPs who would maybe want to invest in specific sectors or maybe specific regions, or there are also a type of LPs who are going to stick to investing in the big funds, the popular funds, and then there are LPs who are willing to bet on the emerging managers. And like the research is out there, of course, that the emerging managers are actually able to return in higher multiples whatever fund they raise. So how do you see that playing out in the funds that are being raised on Revere, and how the LPs are actually investing their money?
Yeah, I think for us, we work primarily with funds that are not, massive brand names like Andreessen, right? And again, if you think about the larger funds, very, very institutional LPs, generally oversubscribed. So, despite the amount of information they may share or not share with LPs, they don't really have a friction point around fundraising. But when you come down into earlier stage funds, funds, with the Roman numeral fund one, two, three, and four, they are always improving, always trying to get access to LPs, right? And so there's a common pain point around how do I tell the story to attract an audience of LPs, right? So those are the types of funds, those are the profile funds that we want to work with, right? Because we know we can activate the most value add for them by going through our process, creating the report, being the expert due diligence provider for those types of funds. In terms of, you mentioned, I mean, there's all different flavors, right? First time funds that are hyper specialized, regional specific. While most of our funds today, and we've got 170 registered funds, most of them are U.S., but we have funds in Africa, we have funds in Southeast Asia, a few in Europe. So again, coverage is really, really important to us because the better coverage we have, the more data we have, the ability to start to do interesting things like benchmarking. And then the more data points gives us a better way to start to calibrate the scores that we apply to those 20 different categories.
Yeah, absolutely. That's a great approach. And besides talking about the recent slowdown in the entire VC space, and there are down rounds happening, and the valuations are not going up as fast as they were maybe a couple of years back. So the ecosystem or the feel has kind of changed right now, and how this industry is going. So do you see that kind of sentiment being reflected in how the LPs are investing their money, or is the deployment going on at the same rate as before?
Yeah, obviously the macro effects, both in terms of inflation, interest rates, as well as risk tolerance, those are all impacts to the overall asset class, right? And that applies both to the established funds as well as these emerging early stage funds. So I think the answer at a more granular level is there is absolutely still interest, and there are absolutely still LPs looking. Those that have a long-term orientation, those that believe that venture is going to be non-correlated, right? And there are studies that says, early stage venture is non-correlated with public markets. But at the end of the day, it's about time and attention, right? So if people are trying to rebalance their public market portfolios, the amount of time and energy they have to spend time with emerging managers is difficult, right? And of course, we help some of that pain point. But most of what people call the tourist investors, right, they're the first ones to disappear because the concept of making a quick return because a unicorn goes public in 2 years is gone, right? And so the people who are left are really kind of believers in the fact that look, venture is a 7 to 10 year early stage venture, 7 to 10 years to exit, but you're also getting them exposure to innovation that they can't buy anywhere else, right? If you think about things like space tech, right? You're really finding those scientific breakthroughs at the early stage venture private market categories. You're not finding that at scale in the public markets, right? So that's the other element that I think is important for a lot of LPs in good times and bad times is to really ask themselves, if I want exposure to innovative technology across everything, from deep tech, applied AI, synthetic biology, where am I going to get that exposure? Right. And that exposure is going to be hard to find in public markets, but easier to find in private markets. So that consistent thought process hopefully should help people appreciate that, invest in the long term. The short term hiccups are just a way to sharpen your steel, around the due diligence, which again has been somewhat of a silver lining for us in terms of how we help them.
Right, absolutely. That's great. And let's talk about some of the like success stories or some of the good funds that have been listed on Revere and are doing well right now, have raised funds, something like that.
Yeah, I mean, let's go back to the different profiles of fund managers, right? So typically, fund ones and twos are out there trying to build their top of the funnel, just trying to have as many of those LP conversations, because they're less well known. So for a lot of the fund ones and twos, our report serves as, in some form, an independent verification that as a first time fund manager, I've gone through an intensive institutional level due diligence process and I've come out the other side, right? So that is really, really important to build credibility in the eyes of the LPs, right? So if you look at fund threes and four, they have track record. Um, they know what they're doing because they've been running funds, but they're typically moving into a different class of LPs, right? They're moving away from the individuals and family offices and maybe into kind of institutions. And those institutions, by nature, again, want some form of validation, right? It's like, it's great. You've got a track record. I can look at that. But, there's a whole host of other fund threes that I'm looking at. So again, because of our scoring system, our standardized process, institutional nature, those institutional Ps are able to, again, better have a second opinion, a filter to evaluate those fund threes and fours. So those are, I put those as kind of the profile of the different types of funds and really what they're trying to do to access the different types of LP communities and where we are adding value to that. In terms of success stories, right? So we've had first time funds, very, very specialized. Solo GP, I'm thinking of one example where, as a solo GP, first time fund in a hyper specialized field, it's not going to rate, kind of top of the class across all the different categories, right? But because of the specialization, there are absolutely going to be areas that are strong suits, right? So what happened in that particular situation is, that GP completed the report, posted it to their data room, and a very large institutional LP with a diversity focus was able to read that report and confirm some of their internal findings, right? And maybe uncover some of the things that we saw that they may not have seen. So in equipping and empowering that LP to have a better evaluation tool, that led ultimately to a commitment into this first time fund. So that's a great example of the scoring not being the final arbiter of whether someone invests, which is important. The scoring and the scoring system is meant to highlight the strengths and weaknesses, right, in a standardized fashion to give people greater transparency of where are the areas that they need to probe, right, dig deeper down. And then we also have another success story of a very established fund with great track record, right? Top quartile track record, going from a fund three going to a fund four. And they were talking to a new type of LP, right? An LP that's in the private wealth category. So this private wealth advisor was very, very new to venture. This was potentially their first new venture commitment, in 10 years, something, something quite, quite impressive in terms of thinking about the information gap. And we were able to work directly with that LP, produce a report on that fund manager. Similar thing, highlight the strengths and weaknesses. We show that as a heat map. That helped their investment committee have confidence and validation that their internal team, with the help of us, has completed something that was really an institutional due diligence process. And that was that helped them get it through investment committee, right? So they were literally at the finish line, and our report and our analyst commentary, right? That's important. It's just not scores. There's actually an analyst that writes the commentary, help push them through over the finish line. So those are a couple of case studies, but again, within the application of the first and second time fund profile versus a fund three, fund four, that's more established.
Yeah, so just to close this off, I want to ask you this one question. Where do you see a Revere going in the next 5 to 10 years? What's your future vision for Revere?
Yeah, so for us, the mission is very clear. We think about how do we 10x the amount of capital that's coming into the venture capital asset class, right? So when you think about 10x, it's not going to be accomplished by simply raising, $1 billion fund or a $500 million fund of fund. What we really need to do is we need to change the buying behavior of LPs and how their confidence level and putting capital to work, right? And this is, kind of massive amounts of capital. So in fulfilling that 10x amount of capital coming in a venture, it really starts with education and information, right? If you think about the tools, the access points, you have the Bloomberg terminal. If you're trading public equities or looking at different types of bonds, that conduit to information is what allows for the free flow of capital into these other asset classes, right? That doesn't exist for venture, right? So that's really Revere is here to do, is to be a pioneer focused on tools to help allocators better understand, better evaluate, better diligence the early stage venture capital asset class. And if we can take on that responsibility and fulfill it just a little bit, we think we're well on our way to 10xing the amount of capital.
Yeah, absolutely. And that mission aligns perfectly with the name of our podcast as well, VC 10X. So that's where.
Coincidental, but
Amazing.
absolutely.
Yep.
Yeah.
And to close this off, where can our listeners follow you? One, and two, where can GPs and allocators go and sign up to Revere?
Yeah, go to our website, and again, it kind of gives people an appreciation of what we do on the fund manager side, the process. It gives LPs a view in terms of what our reports look like. I will, put out a plug out there that we are coming to market early next year with a public-facing directory that will help. Again, just we'll have content and we'll drive strategy to that. That website is explorevc.com, and it's really meant to kind of catalyze the entire ecosystem, both GPs and LPs, just to have some basic information on all of the funds that are in our pipeline, allow people to click through, kind of request a report, and then our team kind of connects from there.
Yeah, that sounds pretty amazing. I'll make sure to put all these links in the show notes below so that our listeners can get there easily. Thank you for coming on. It was a pleasure hosting you, Eric, and happy journey with what you're trying to build with Revere.
Appreciate it. Thank you so much, Prashant. Take
Pleasure.
care.